In this video, I'm about to be breaking down everything you need to know about daily bias when it comes to using ICT and SMC concepts. So, first, we have a look. This is my trading journal for the New York session, and I have two pictures here. The first one is what we're going to be looking at mostly is the bias going into the day. So, throughout this whole video, this yellow box is the range, right? At 9:30, this is what the candle has done so far because this candle actually closed at 10. And I see people do these 4 hour like time frame videos and they just use it like, oh, this candle's already closed. But at 9:30, that's not the case. So we have the range here with this yellow box, and the line here is where price is currently at. So as you can see, the open is obviously the same, and now we have a little green candle with larger wicks towards the upside and slight wicks towards the downside. So that's what we see basically at 9:30, and that's going to be throughout the whole video. That's going to be what I'm going to be referring to. So as you can see here, this is a very easy example, which are the first two examples I'm going to show are the start of February, which is very easy to identify bias, by the way. But then later on to February, I'm going to show multiple examples where it's not so easy, but it's still doable. So as you can see here, there's a big gap, and we start moving upwards, and we actually close above this gap and obviously above constant encroachment of the gap. So what happens here? We start we start retracing back down into this fair value gap. And as you can see, we have wicks down here, but we close above the fair value gap. And more importantly, close above consequent encroachment of the fair value gap, meaning we're respecting the fair value gap. And mind you, this is a 4 hour time frame. So every fair value gap holds way more presence than on the 1 minute, where you can see a lot of them getting disrespected and stuff like that. Like even this fair value gap here, we tap into it and it gets respected. I know it doesn't happen all the time, but remember, 4 hour fair value gaps are more stronger. I was about to say are just stronger than 1 minute fair value gap. That's why we use these PD rays on the higher time frames to identify lower time frame moves. So basically that all that to say that we reject off this fair value gap and we start moving towards the upside. So it's obvious, okay, we have a bullish bias, we're moving up, we reject off this fair value gap, we're starting to form bullish candle, so we're targeting towards these highs over here, these 4 hour highs. I'm gonna show you guys what that looked like when I actually took the trade on the 1 minute time frame. Even though this is not a video really breaking down my entries, it's more a bias video. But as you can see, our bias was correct and we went bullish. But yeah, so that's basically it right here. We just rejected off this 1 minute fair value gap, and that's like signal to me to take the trade towards those 4 hour highs that I mentioned earlier. Another easy setup, which is the next day right after, we had basically similar to the previous day. So we obviously rejected off this fair value gap on February 4th, and now February 5th we had another 4 hour fair value gap that formed after taking out those highs. So again, we're still moving in an uptrend. And as you can see, the candles reject off the consequent encroachment of this 4 hour fair value gap. And we're ready at 9:30. As you can see, this line over here, we're already like a big green candle over here. So we already showed, okay, we're rejecting off of this consequent encroachment of that fair value gap, targeting towards these highs. So yeah, I basically wrote that rejecting off consequent encroachment and in an uptrend and giving me a bullish bias. That's basically all that you needed to do while taking this trade on February 5th. And again, I'll just show this real quick. This is the setup. I'm not too proud of it, but I'm going to be transparent of why I took it is basically like a larger stop loss that I'm used to, but targeting like higher. This is not really my style of trading. Mostly, like I should have put my stop over here below this order block, because that's what we use to reject off of the breaker plus the order block. So I could have put it here. Then my stop would be at this minor sell side, which would be my full take profit. But instead I did something different, which is fine, but that's normally not how I trade. And that's what I basically wrote in my notes over here, as you can see. So yeah. Oh shit, I put resolve, but whatever. I'm gonna rewrite that later. Anyways, let me move on to some of the tougher setups, which are later on into February. And I'm going to start with February 19th over here. So as you can see, okay, it's a bit awkward. We're topping out over here. We have a market structure shift, mind you, and then we don't like close above this high. So, okay, it kind of confirms that we're going lower, but we disrespect this fair value gap. So now what I'm seeing is like, okay, we already like disrespect this fair value gap, so we're not using that. And then we keep going lower, and now this fair value gap that we stopped using becomes a reclaimed fair value gap. So as you can see, again, the range over here, which is that yellow box, we retrace into this consequent encroachment, and we start rejecting off of that. So okay, we're rejecting off of the reclaimed fair value gap, and now we already have a little red candle, which is what you see at 9:30. So we're going down market structure shift. Like we don't break this high, so we're in a kind of a downtrend over here, which is just starting, and now we have a reclaimed fair value gap. So of course, it's a bit more complicated when you look at it in real time. You're like, okay, what the fuck is happening? But we can see here that if you break it down, it's not that complicated. Um, and it's definitely doable. So we're going towards these lows, mind you. I don't say you have to get these lows because the 4 hour low over here is actually, it takes a lot of time to get to. It's not like a 1 minute, which is like obviously much like faster, right? So on the 1 minute, this low will look hella far away. I just have this like marked here, which is okay. If we reach that target, that's basically what we're looking for throughout the whole day, or it could take multiple days. But we're just getting a target. We're like, we know we're going to start moving towards that direction, so we could take minor sell sides like along the way. So yeah, that's very like important, by the way, because you're not going to always get the full move, right? You're just targeting towards that low or high. But yeah, I'm gonna show you guys what that looked like. So liquidity sweep on the 1 minute, we know, okay, we have a bearish bias, by the way. This is at 9:30, and we start taking trades after 9:45 because I don't like taking trades in the first 15 minutes because that could be very volatile. Yeah, so we sweep liquidity and we go back into that fair value gap that I mentioned earlier. Okay, we reject off of that, we break structure, we re-enter into the order block and breaker block over here, and then we target the next lows, which and plus fair value gap, which is here. So you could take it at the top of the fair value gap, but there's a major low, which where I took it at, which is basically near the top, so there's a very good chance we're going to take that also. You could take it at consequent encroachment here, but it's basically all like TP placement is basically you really have to like it's basically very individual because a lot of people will take longer TPs with bigger stop losses and stuff like that. So I don't really want to like guide you too much, but what I do is basically the most clear like target that's like obviously at a reasonable distance. It's everyone is different. So like for me to say reasonable distance, I usually my setups are around like 2.5, 3R and stuff like that. But yeah, it's very clear to me that if there's a low within the fair value gap at the top of it, we're probably going to touch that fair value gap and we're going to also sweep that low. But yeah, it's basically TP placement is very like even ICT said this. It's very like individualistic. But yeah, we're gonna go on to the next one here because I took kind of long on that one. But yeah, so February 20th. In my opinion, this was maybe a bit easier since it wasn't really to do with a reclaimed fair value gap and basically a normal fair value gap. But still, it's a bit weird. All right, so we're moving up like I showed you in the previous day, and we break structure. Okay, but again, when it comes down back here, we don't break structure. So it's like, okay, what's happening? Are we rejecting off of that or something? We get a move up, and then again, we don't break structure towards the upside. So we're like, okay, what the fuck are we doing, bro? Where it's like we're consolidating, which this is consolidation basically. But 4 hour consolidation, you can still catch a lot of moves on the 1 minute time frame. Since, like, of course, bro, this 4 hour move here is like a huge move on the 1 minute. But yeah, so we actually do have a fair value gap here, which is why I say it's pretty easy. But you do have to consider this is a volume imbalance here. And when there's a volume imbalance, you have to include it within the fair value gap. So don't forget that because you could have had a smaller fair value gap that you would have like marked out here. And you could say, oh, this closed above this fair value gap and above consequent encroachment. Yeah, nah, this is not like a fair value gap that will hold. But you have to include the volume imbalance, okay? Don't forget that. So as you can see here, we close respecting the constant encroachment of the fair value gap, which is a very good sign, especially on the 4 hour. So previous 4 hour candle respecting fair value gap, a bearish bias if we show signs of price moving lower. That's if we show signs of price moving lower because at this point here, we have a little green candle, like very little, basically like a doji candle with wicks on both sides. So we're like, okay, we have to see what happens here. If we reject off of this level, right, and we're going to see that level when I look at the 1 minute. I'm going to leave that level on, by the way, just so I know what's actually happening. But yeah, if we keep moving up, if we just like destroy this fair value gap, obviously I'm not going to find a setup, right? And that's what happens with bias. It makes you safe from like not taking the like long setups when you have a short bias and shit like that. But yeah, so I'm gonna show you guys what actually happened on February 20th. So boom, huge rejection. As you can see, obviously we saw the 10 minute, 10 a.m. candle on the 4 hour, and you saw there's a big rejection. But I'm also not too happy about this trade, by the way, and I'm gonna tell you guys later. But yeah, so a huge rejection over here. You couldn't really find a setup, especially me, since I only take setups after 9:45. So you can't really find a setup in this big move down. But then we go retrace all the way back past the equilibrium. So I'm okay, we're gonna continue going lower, which we kind of did, but like I don't know what happened after this because I take my setups like for sure before lunch. So I let the setup play out till 12, and then I took it out. But yeah, like I basically missed the move, but I was a bit greedy to like find another way in because bro, that's a huge move down. So yeah, I still made like I guess like $200, which just doesn't really matter. It basically matters the 1.28 RR on this trade, and that's because even though the bias was right, I don't think that was the best like mindset while going into the setup. So I'm gonna take follow ruled off because that's low key. Now I'm thinking about it. I shouldn't have really chased that. I should have just accepted that I got the bias right, but I couldn't find a setup. Anyways, I'm yapping too much. But yeah, so Feb 21st, as you can see, boom. Now we have a clear downtrend thanks to that big ass candle. And it basically gives us more insight on to what's happening. So it's a bit easier than the previous few days that I showed you. So yeah, but also on this setup, it's a bit difficult because we actually like disrespected this fair value gap. So now you're like, oh, okay, are we gonna start going up? Like, use this inverse fair value gap, stuff like that. But no, because there's order blocks above here and we're in a downtrend. So mind you, we didn't break structure yet. So we're still in a downtrend and there's order blocks over here. And as you can see, okay, huge rejection. Even at 9:30, where we have a little green candle, we can still see a big wick up here. So okay, we rejected that. We rejected somewhere off here these fucking order blocks over here. So price didn't respect the 4 FL gap. However, there's an order block above. Also, it's important to note again, market structure shift towards the downside, and we're still in a downtrend. Yeah, so anyways, if we close above the order block, as I mentioned here, we're going to start like being bullish, but you probably wouldn't get a setup since like it would by the time we close above this, it's probably going to be past 11:30 when I don't take any more trades. But yeah, so if we reject off of this order block, which is what ended up happening, we're going to go bearish. So yeah, basically using the PD rays as like insight, the bigger PD rays to see what we do off of those and then taking setups based on that. That's basically what it comes to when talking about daily bias. But yeah, so we ended up going lower, and I actually cut a big setup today, that day on February 25th, 21st. So yeah, it's actually nice that I actually wrote this since I'm doing this video. But see, at this point, we closed below that 4 hour fair value gap. So, bro, that's signs, very bearish signs right here. So let me show you that what it looks like on the 4 hour. So at this point, okay, at that 10, that's this what we see. Fuck all that range and all that bullshit where price is. We're actually right here at this point. Okay, boom, we rejected clearly off this order block and we broke past this fair value gap that we disrespected. So we'll see what happens. Like reclaim the fair value gap. What happens on the 1 minute? So as you can see here, boom, reclaimed into the fair value gap at past 10. And then we usually I wait from market structure shift, but since I have bias, this actually led me to taking like more setups. It's kind of like counterintuitive because you think, oh, you can only take setups one way, so it's like you'll take less setups. But no, because you're more confident in taking setups because you see the higher time frame and what that's doing. So you're like, okay, I'm gonna find a set. If I find a setup, I'm gonna take it. I don't have to wait for an A plus 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 setup. You get what I'm saying? But yeah, so retracing that 4 hour fair value gap, break this inverse fair value gap. So it's bro, it's hard to zoom on this. Like if I zoom, it's like hella low quality. But yeah, we break past this fair value gap. Okay, so like that shows it's basically inverse fair value gap, and we retrace into the fair value gap on the 1 minute. Okay, now that's enough signs for me to start taking a trade. And you take a trade lower. I took profit at this 4 hour fair value gap. Damn, bro. I like when I say fair value gap too much, bro. It's hard for me to say it, but yeah, I marked that out here. I think. Oh, is that the fair? That's deep. That fair value gap. But yeah, I guess it went all the way down there, and yeah, I took profits at this fair value gap. But if you were greedy as hell, you could have took it at constant encouragement. And if you were even more greedy, which I know some of y'all are fucking greedy, you're probably taking it at this low here. And obviously, we could see both of those actually ended up playing out. So y'all greedy ass motherfuckers would have worked and you would have hit all your TPs. But for me, bro, 3.81 risk to reward is definitely good enough. It's a big trade. So I'm happy with that. And if it fucking bounced off of consequent encroachment or some shit, I know a lot of y'all would be hella cheese, bro, because y'all like taking it way too far. But yeah, that's basically it for the video. Actually, wait, I'm gonna show you guys this one setup. I showed it to you guys last video, and again, this shows zero and all this because I did take it on demo. Like I said in last video, this was not a setup that I took. So this is all hindsight right now, or not hindsight. That was a demo, but now obviously it's hindsight. But yeah, in a downtrend again, that's super clear. Obviously, this is an easy setup, and you can see, okay, we have this now it's not a wick actually. So we have a bigger green candle towards this upside, but we like rejected off this order block and this breaker. So okay, obviously if we keep moving up at this point, we're not going to find a setup because we have a bearish bias. But obviously I said basically the same thing. We were like bouncing off of this order block slash breaker, targeting these lows. Obviously at this point, this low wasn't hit because as you can see the range over here. So we're like aiming for like somewhere around this low. And obviously there's multiple other lows on the 1 minute. And I marked out other significant lows on the 4 hour like these, which we ended up actually targeting. So boom, 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 3 setups here. Again, I covered that in my last video. If you want to see taking 3 setups in one day, check my last video, and I'm already describing everything that was going throughout damn, bro, I described that horribly. Wait, I'm about to be I was going over my thought process behind taking all of these 3 trades in the same session. So if you want to see that, click my last video. But yeah, that's basically it for daily bias, bro. So basically, to sum it up, using PD arrays on the higher time frame to dictate lower time frame movement. But yeah, so remember important points that the 4 hours fair value gaps are stronger than the lower time frame fair value gaps. So like they hold precedence over lower time frame fair value gaps, so they're going to be more important. Okay, so keep that in mind, as well as yeah, don't when people show you those videos with that 10 a.m. candle close on the 4 hour, that's not what you're gonna be seeing when you look into the charts, right? That's basically like what's already happened. Okay. Oh shit. I don't know what I'm saying, bro. That's like what's gonna happen or some shit like that. Anyways, you get my point. So make sure, when you're doing your back testing on this, you put that line at 9:30. I usually make that range on that 30-minute time frame because you can see, okay, the lowest point towards the highest point from 6 to 9:30. You can mark that out on the 30-minute, and then you mark the line where price is at on the 30-minute as well. So obviously in replay, when you go back to 9:30, you could do all that, and then you go back on the 4 hour and you could get the same thing I showed you with the range and where price is currently at. But yeah, that's basically it. If you guys have any other suggestions for other videos, or you have any questions regarding daily bias, put that shit in the comment section. I'm gonna answer all the comments like I always do. But yeah, that's it for this video. I'm gonna see you guys next video. Peace, boys.